We had an interesting day on Wall Street today on this first day of the business week, this Monday, January 9th. We saw all of the major averages showing green. For more, let's head to Deborah Kostroun. She is down at the New York Stock Exchange with a detailed look at what drove U.S. equities, and our senior markets correspondent Julie Hyman digging into one stock in particular, aluminum giant Alcoa, reporting fourth quarter earnings just an hour ago. Deb, let's start with you.
Well, thanks a lot, Mark. You know, the big news is even though economic reports have been getting better, at least for the U.S. economy, something we've been hearing over the past week, because today we really didn't have any economic reports. The big question mark is still the European debt crisis. And today, of course, a lot of people talking about the fact, can the euro survive? Now, German Chancellor Angela Merkel telling reporters after meeting with French President Nicolas Sarkozy that they are considering measures designed to rescue the euro over the next 3 months. And taking a look at one stock, Netflix, one of the worst performing stocks last year, rose the most in a year, bringing its year-to-date gain to more than 40%. Netflix rising on buyout rumors and also prospects for subscriber growth in their U.S. streaming business and also internationally. Today, the company also introducing an online service in the U.K. and Ireland. And GameStop had its biggest drop since August. This is the world's largest video game retailer. They cut their fourth quarter and their comparable year sales forecast, saying that their holiday sales falling slightly. And that is a wrap from here, Mark. Now back to you.
All right, Deborah Kostroun joining us live from the New York Stock Exchange. Deb, thanks. Now, Julie Hyman, Alcoa, Julie, posting its first quarterly loss in more than 2 years. What happened?
Well, aluminum prices happen in a nutshell, Mark. And really, Alcoa has been struggling over the past year, along with many of its competitors, because of what we've seen in the global economy and a bit of a slowdown. And that means aluminum demand and aluminum prices have also been declining. Now, many analysts who cover Alcoa have been resetting their expectations for the earnings today. And that's after Alcoa came out last week and said it was cutting its smelting capacity, aluminum making capacity, by about 12%. So most analysts were expecting a loss, and that is what Alcoa delivered, a loss of 3 cents per share. That matched the average analyst estimate. But some other numbers are also important to talk about, including the sales, which rose by 6% to almost $6 billion. That was a bigger increase in sales than analysts had anticipated. The company's overall loss was about $191 million. The question is, are things going to look up in 2012? And the CEO of the company, Klaus Kleinfeld, said that demand this year will rise by 7% and supply will diminish. And indeed, analysts leading up to the report said if other aluminum makers follow suit to Alcoa and cut their capacity, that you could see a bit of a boost to prices. So that would obviously be a boon to Alcoa if you do see that pickup in demand, drop in supply equation. All of this is equaling an increase in those shares in the after hours, building on the gains that we saw during the regular session. The question is, indeed, whether those aluminum prices will come back and whether Alcoa will be able to benefit from that effect if it happens, Mark.
All right, Bloomberg's Julie Hyman, and before her, Deb Kostroun, joining us from the Stock Exchange.